Good afternoon and welcome to the Morrows Monthly update for April. Despite having their worst first quarter since 2010, equity markets have remained resilient and continue to move through record highs, effectively shrugging off the challenges surrounding the US Federal Reserve's continued tapering of stimulus, relatively soft US corporate earnings growth, and the heightened geopolitical unrest around Russia and Ukraine. The Australian equity market was higher by around 1.8% in April. However, global equity markets were somewhat mixed. Europe was up 2% and the US finished higher by 1%. However, Japan was down around 3% and China was lower by 2% for the month. Global bond yields generally fell, with the benchmark US 10-year Treasury yield falling to 2.65%. Bond yields in peripheral Europe also continued their decline as sentiment in the region improves. Commodities were generally weaker, particularly iron ore prices, which continued their decline after stabilising somewhat in late March. Both gold and oil prices were flat during the month. The Aussie dollar was generally flat against most major currencies, and the US dollar was weaker against the euro, the pound and the yen. US economic data was mixed in April. Both the manufacturing and services sectors picked up, and industrial production and retail sales were strong. Employment growth was in line with expectations and the unemployment rate remained flat at 6.7%. On the negative side, housing data was quite soft and the preliminary reading on first quarter GDP growth came in at a very disappointing 0.1%. Data out of Europe was generally positive, with both the manufacturing and services sectors positive and also industrial production up. Inflation rose slightly to 0.6% year on year, but this remains well below the ECB's desired level. Data out of China remains mixed. Manufacturing sector continued to contract, however the services sector picked up. Trade data, retail sales and industrial production were all positive, and first quarter GDP growth beat expectations despite falling to 7.4% year on year. In Australia, manufacturing contracted for the fifth consecutive month, and the services sector also fell. The unemployment rate fell to 5.8%, however this was largely due to a decline in the participation rate. The inflation rate also came in lower than expected at 2.9% year on year. At its May meeting, the RBA left interest rates on hold at 2.5%. We are now 2 weeks into May, and the adage of sell in May and go away hasn't taken hold, with many global equity markets either at or near record highs. In a prolonged low interest rate environment, investors continue to focus on high yielding investment assets such as equities. However, over recent months, markets have been range bound and appear to be in a consolidation period after several years of very strong returns. At some stage, however, markets will likely break out to either the upside or the downside, and as we head into a seasonally weak period for equity markets, we will maintain our focus on risk-adjusted returns and managing downside risks for investor portfolios. We thank you for taking the time to listen to this update, and we look forward to talking to you again next month.